Good morning, everybody. This is the Live Market Open for Thursday, May 19th. Have lots of action in markets thanks to the Federal Reserve. I'm Yohay, Elam of Forex Expansion Market Movers podcast, doing the show as usual for FX Street. Sorry for this noise. Just a moment. Let me try to adjust what's going on here. Okay, sorry for that. Anyway, as always, we'll cover recent developments in markets, talk about the various charts and levels. We have different levels to talk about. Discuss the next 24 hours, which could be quite busy in markets. And then, and as always, throughout the show, I'll answer your questions. If you cannot see the chat box alongside the screen, please go to tlk.io/fxread-live-video. Okay, so the Fed went hawkish. This doesn't happen every day. This is not what I had expected. The Fed minutes certainly lift the US dollar, way on stocks, way on oil. So what did they say? They said that the June hike is now possible. They actually mentioned the word, the name of the month, June, six times in the meeting minutes. As I said, the minutes are revised until the very last moment. So this emphasis, this repetition of the word June was probably inserted there after some good figures came out. Of course, they are data dependent. If we compare it, and I read Adam Button's analysis in Forex Live, what they say now in the meeting minutes in comparison to what they said in October towards the December rate hike, it's not that committed, okay? It's nothing is certain. They're more data dependent than they were back in October towards the December rate hike. Some analysts are also talking about July, okay, because as I mentioned in many shows here, the Brexit referendum, the EU referendum about Britain's membership in the EU could have significant market impact. It's held 1 week after the Fed decision in the middle of June. Okay, so that could push it back to July. But in July, we don't have a press conference. That's why I discarded this option. But if we might get in June, like huge hints that it's happening in July, and then it could happen. So I wouldn't rule that out. If we look at bond markets, we'll look at charts very soon. But if we look at bond markets, the implied probability, we see quite a jump here. So you can see here the chance of rate hike for June still low, but it stands on sort of two-thirds. And if we look at the previous day, you see here on the right-hand side, you can see that before the minutes, it was 15% chance for rate hike. Now it's about 33%, so the chances are double, okay? And if we look at July, in the middle of the summer, yet again, according to bond markets, this isn't scientific, okay? And it can change many times as we move along, as we get more data. And we hear more Fed speakers, of course. So in July, actually, bond markets are pricing in a rate hike, okay? Okay, enough said. Well, good morning, everybody. Luca, Dan, Fabian, Ed, Dinda, everybody. Let's look at the charts. Enough said. I think it speaks for itself. This is euro dollar. It held above the 112.50 level. Actually kept a safe distance, even rallied just a bit, well, in euro dollar terms, before the release. And then, boom, we had a fall. The pair did manage to hold on to support at 112.20, 112.15, this sort of line that carried it. But this morning, we're seeing a resumption. Just a second. Yeah. Well, so the low so far has been 112.06, right? Why am I talking about 112.15, 112.20? Well, if we zoom out, well, even more, I can show you how this line worked as support right here, okay? So that's April 22nd. And also here, back in the end of March, it worked as resistance. So we did have a breach of this line on euro dollar, but I wouldn't call it a real break, okay? The break is not confirmed. Euro dollar does have its fake outs. Anyway, the next line of support is 111.50. If we have a bigger move to the downside, and I mentioned this line because this was significant support back here at the end of March. So that's the next line I'm watching, and then 110.70. On the top side, we have 113.35 remains resistance. Okay, so quite a move also in euro dollar that doesn't always move that much. Pound dollar. The pound is actually the strongest, I would say, of currencies. Well, this morning it's sliding just a bit, but yesterday the pound enjoyed an excellent day. Well, maybe I'll go back to the slides and then return to the charts. So yesterday we had another poll by Ipsos Mori. It showed an overwhelming majority, 55%, that intend to vote for the UK to remain in the EU. Okay, an absolute majority, and against 37% to leave. That's a huge margin of 18 points, 18%. Okay, that gave the pound another boost. In addition, we had UK jobs report was okay. A drop in the jobless claims that was better than expected, and wages went up 2%. Wages, excluding bonuses, well, they disappointed expectations. It wasn't all perfect, but wages look not as bad as expected, and the jobless claims for April, it was good. But the pound reacted only a little bit to that jobs report and acted a lot more to that poll regarding the chances of the UK to stay in the European Union. Well, we did see the pound slide on the Fed's meeting minutes, but the pound remains one of the strongest currencies out there. Yeah, I would still say 146, maybe 40 is resistance instead of 50, and support over there, while around 145. Next support 143.50. Okay. On the downside, the pound remains one of the strongest currencies out there. Dollar yen also here finally move. Finally, a real break of the triple top at 109.50. Oops, sorry, wrong button. Anyway, we had a very hard time moving higher. Now, boom, dollar yen has settled above 110. The high for today so far 110.38. 111 is the next line of resistance I see. In general, I see here round numbers all along. Support, low support at 108.40. Okay. Commodity currencies, we see a different story, lots more weakness. So dollar CAD made a big move to the upside, and 130.60 is the current level. It reached resistance that I mentioned there at 130.80. The next line of resistance, if we have a break above current levels, is 131.70. And the next, and on the downside, of course, 130 is the round level, which also worked as resistance several times. So this is the line I'm watching. Now, the Canadian dollar suffers from also pressure from the Bank of Canada. It doesn't like a strong currency. And yesterday we had a turnaround in oil. Oil prices are still doing okay, $47 on WTI crude oil. But we had a rise in inventories of crude, of distillates, of gasoline. The thing I'm watching is the level of production. Yes, it fell once again in the United States, but not as much as in the previous week. So it fell 0.1%. Perhaps now with higher oil prices, US production will rise. Okay, so here we are. Dollar CAD finally made a break, and now it's trading at a high range, 130 to 130.80. Okay, the Australian dollar remains the weakest link, extending its falls on that RBA cut and lower forecasts. We did have a jobs report in Australia. It came out more or less as expected, but not good enough. So it was a small miss. Let me go to the slide for a second. A small miss on the expectations. 10.8 came out instead of 12,000. That's sort of one part of the disappointment. Another one is that there were gains in part-time jobs and losses in full-time jobs. Now, the unemployment rate did beat expectations with 5.7, but anyway, it wasn't good enough. The pressure is on against the Australian dollar, and this was just not good enough to change the course for the Aussie. So also this morning, Australian dollar extended its falls 72.11. The moment we already dropped under 72, I don't see 72 as a line of support. 71.91 was the low. I see 71.40 as the next low, followed by 70.50. Resistance now, well, turns to 72.40, which was the low earlier this month, in the month of May. Okay, Kiwi dollar is doing a bit better. We did fall to support there at 67.20. I guess we have a double bottom there. Very well-defined range in Kiwi dollar, 67.20 to 68.40. Okay. Basically, the Kiwi is down because of the US dollar. Nothing related, nothing that was released in New Zealand over the past 24 hours, at least nothing of significance. Dollar Swiss, also here reflecting the strength of the US dollar. We reached resistance at 99, not going above this level at the moment. Support there at 98.50, resistance 99. Of course, above we have the round number of parity. Okay, Euro Swiss, well, more or less the same ranges, above 110.50, 110.60, currently at 110.80, not going anywhere fast. Euro Pound, huge drop in this cross, thanks to the strength of the pound, thanks to the higher chances of the UK remaining in the EU, what markets want to see. So big, after an attempt to recapture 78.50, okay, this failed. We had a drop, smashing the 77.40 level and reaching levels last seen, well, in quite some time. Let's zoom out just a bit to see when we, oh, that's a bit too much, but okay. Anyway, we're currently at levels last seen in March, so it's a 2-month low for this cross. Next line of support is quite close here, 76.60, followed by 75.80 and 75. So quite a turnaround in favor of the British pound, also against the euro. Okay, the pound is really on a roll. Let's continue. Euro yen. Well, these two currency pairs, that the euro used to be a safe haven currency, it could still return to work as a safe haven currency, currently in range 123 to 124.20, very narrow trading at the moment, but we are seeing big moves here. 160.60, a break above the round 160 level, next level is 162.50, then 163.80, and the downside we have 158.50. And before we just get to your questions, let's look at oil prices. We did cross above 48, got closer to 49 earlier this week, but now things have cooled down. Oil is slipping, or whatever other wording you want to use, but we're still, as I see it, on high ground. We did have also a report that inventories in Saudi Arabia are dropping a bit, but what matters more is inventories in the US, which are on the rise. They are on the rise despite lower production from Canada, from the oil sands in Alberta, because of those wildfires. There is some progress there. There's heavy rain there, and this helps extinguish these fires, as in the latest news that I've heard. In general, oil is still on elevated ground, but cooling down from the highs. Okay, I've seen a few questions coming up here. Well, good morning, everybody. Good morning, FX Ambassador, asking about, Ed, I bet June after Brexit vote, whatever the vote, Fed will have emergency closed meeting. Well, I think that I don't think they'll have an emergency meeting, assuming, well, if the UK stays, but I'm sure they'll have one if the UK opts to leave. Retail sales in the UK, we'll get to that. We'll get to the events of the day quite soon. FX Ambassador. Ed says many jobs in the UK are low basic and high commissions, so wage growth is distorted. I say sales jobs anyway. Yeah, well, you do have their separation of in the jobs report of jobs including bonuses and excluding bonuses. Both are just around 2% gain year over year. They used to stand at 3% just a few months ago, so it is cooling down there as well. Higher view on Kiwi dollar. I've been short at 67.60. Well, Kiwi dollar, as I said, the range is 67.20 to 68.40. Currently, it's been pushed down in the range. The Kiwi is looking in general okay. It's not the Aussie. It does get carried away from time to time with the Aussie and the Canadian dollar, but among the three commodity currencies, it's the stronger one. Okay, So 67.20 is the level to watch in my opinion over there. Okay. Let's see if we didn't miss any events from yesterday. Well, inflation data in the Eurozone, no surprises. Core inflation was downgraded to 0.7. The headache for Draghi continues. And headline inflation was confirmed for the month of April at minus 0.2. Deflation continues here in the Eurozone. Okay, so we talked about all the events from yesterday. Another thing catching the headlines this morning is the disappearance of an Egypt Air flight from Paris to Paris to Cairo. Let's see if we have news about that. Probably the plane crashed, so that's bad news, of course. We don't know what's the reason, but it does get that attention of markets. If you want distraction from regular markets, but it could also have implications on markets, of course, if it's terror related. No, I don't have news about that at the moment. No, it's been followed closely. We'll get updates on that, I guess, quite quickly. Anyway, also today is an eventful day. So to answer a question by FX Ambassador, retail sales in the UK released at 8:30 GMT. As always with UK releases, watch for a lot of action 20 to 30 minutes before the publication, and of course a reaction to the publication. And then the scene, again, the pound will return to the should I stay or should I go dilemma regarding the Brexit debate. Okay, so and look for markets front running the event. Look for instance, if we have a rise in the pound towards the event and then a positive retail sales figure, the pound will probably not extend its rises. Okay, or in the other way around, if we have it falling as we are seeing it right now, and then we have a miss on retail sales, then we can expect no follow through, because maybe the figure is leaked, maybe it's rumored, maybe the markets have some expectations. Anyway, let's look at the expectations. I must, when the most important figure is retail sales month over month, the headline figure, okay? Might be the most volatile one, but that's the one having the biggest impact. That's expected to rise 0.5 after dropping 1.3 last time. Also worth noting is the one excluding fuel, expected to have the same move, 0.5 to the upside. Year over year, we're expecting 2.5% rise after 2.7. All in all, expectations are for a good report, an okay report. It's important, of course, for the UK, but now things, well, there is some distraction because of the opinion polls regarding Brexit. Currently, things are in favor of the British pound. Things are looking better, higher chances for the Remain camp to win. Lots of short covering after a long period of negative atmosphere. Okay, so that's what's going on at the moment. Remember, it could have a big effect on the pound, but perhaps short-lived. Okay, so I think that answers your question, Rolly, as well, right? Remember, rumors sometimes have an early impact on the pound, or leaks, I don't know. And then we have a reaction. Let's see if we have the pound sliding towards the event, and then we have a small miss on expectations, or even a beat. Then we could have a big rally. The bias currently is in favor of the pound, more against the euro and the yen, of course, but also against the US dollar. The pound looks relatively strong. Okay, next event for today. Busy day, I already said. At 11:30 GMT, that's 1:30 in Frankfurt, where the ECB releases its meeting minutes. These are minutes from the meeting in the middle of April. In that meeting, the ECB did not change policy and sort of wanted to see how the measures announced in March and implemented, most of them already implemented in April, and some of them only in June, the TLTROs, how they run through the system, how they work, leaving the door open to perhaps more cuts. But in interest rates, the negative deposit rate, the deposit rate in the Eurozone is minus 40 basis points since March. The ECB is not in a rush to move. Another thing coming up at that meeting was that when asked about helicopter money, and Draghi said there was no discussion about this, this comment sort of pushed the euro a bit higher. Now, helicopter money is the concept that the central bank basically hands out money. Seems a bit crazy, but we had other crazy stuff already going on. Let's see if indeed the meeting minutes reveal no discussion about this kind of funny money. Probably not. It'll probably show a divide once again between the hawks and the doves at the ECB. I have lower expectations. I don't think it'll be a big event for the euro. Not meaningless, not a non-event, but not as impactful as the Fed's meeting minutes, okay? 12:30, we have US jobless claims as usual and the Philly Fed index. Let's take a look at that. What we are expecting here on the... Okay, so last time we don't have fresh expectations, but anyway, last time we had a huge jump in jobless claims. It was quite worrying, okay, because we had 2 consecutive weeks of jumps, 294,000. After a few weeks that we had around 250, even below 250. So that's a bit worrying for jobs. It was the previous week was 270, if I'm not mistaken. Anyway, let's see if now we have a fall back to normal to at least 270. It'll be so we can stop worrying. The moving average still remains relatively low. Okay, and then at 12:30, we also have the Philly Fed manufacturing index. Expected to rise from negative minus 0.6 to plus 3.5. But earlier this week, we actually had the New York State manufacturing index miss expectations with a drop. Anyway, it's not that important. It is for the month of May. It is for the current month. In theory, it should be very fresh, early, meaningful. In practice, we know that it has less impact than it used to have, this Philly Fed release. And then I think the big events for today are speeches by 2 Fed officials. So at the 1:15 GMT, 3:15 here, we have Stanley Fischer, he's number 2 at the Fed, and at 2:30 GMT we have Bill Dudley, number 3 at the Fed. Okay. Stanley Fischer used to be the governor of the Bank of Israel, and he had a role in the World Bank. Anyway, number 2 at the Fed, the vice chair, he's an important figure, and he is relatively hawkish. Okay, so I would expect him to echo, to sort of reflect also once again what we heard yesterday in the minutes, that June is on the table, of course, data dependent, but things, inflation looks stable, jobs look good. The same messages we got yesterday, that if the data until June is okay, where the Fed is ready to hike. That's at 1:15 GMT. The bigger question for me is 2:30, Bill Dudley, number 3 at the Fed, the president of the New York Federal Reserve. He is a dove. Dovish Dudley. Bill Dudley has sided with Janet Yellen with her dovishness in many occasions. Okay, so when at the end of March, beginning of April, we had a few Fed officials talking about being optimistic, talking about raising rates 2-3 times, and then we had Yellen pouring a lot of cold water, expressing a lot of caution, worries about the global economy, you name it, hitting the dollar hard, lowering expectations for a hike. Bill Dudley, he was on her side, okay? So for me, his speech today at 2:30 GMT is the most important thing to see if he's still very dovish, and in this case the dollar will fall, reverse its gains, and we'll also learn that Yellen is probably the same, not really keen, I mean, looking for any excuse not to hike in June, or if he also changed his mind since his previous appearance, and now he also supports what was the message in the Fed minutes, 6 times June. Okay, that means rate hike is certainly on the cards, assuming data remains positive. So that's for me the key event for today. It could be if he goes dovish, we could see the dollar reverse its gains across the board, and if he echoes what the Fed says, I think we can see further dollar gains. Okay, that's for me the key event for today. Let's see what else we have here on the agenda. And yeah, so actually that's the last event that, well, we do have other less important stuff, but for me, out of all the events I mentioned, this is the key event for today. Okay, let's see if you have more questions. Yes, more comments here. Good morning, everybody. The Hawks took the toys away from Auntie Janet. Would need Dale to record a new soundtrack about her loneliness. Yeah, Dale makes a great imitation of Janet Yellen. Janet Yellen, in general, so many cases doesn't commit to anything. Like a good central banker, saying things like, well, if the data is good, we'll raise rates. If data is weak, we'll not raise rates, which is sort of very trivial stuff, not committed to anything, dodging questions. Yeah, she'll be speaking, and maybe mark your calendars. There's still time to go, but June 6th, about 2 weeks before the Fed decision, she'll be speaking, and that could be the key date for getting either getting the nod, either getting the word, the big message, not even more than a hint that the Fed will raise rates, or that they're too hesitant, Brexit related, data related, whatever. Okay. Anyway, question here about the Aussie dollar. So Aussie dollar, well, currently bouncing from the lows. This is a 30-minute chart. Australian dollar, I see it as one of the weaker currencies out there, if not the weakest. We already fell over 600 pips from the highs. Okay, there are good reasons for selling the Australian dollar. Okay, it's more than a correction after the move higher. This is a change, of course. This is a fall for the Aussie. 78.40 was the high. Why did the Aussie fall? Well, the Australian economy is still, it is looking good, I mean, better than China, but not convincing enough. The Reserve Bank of Australia cut rates. That's because inflation fell. So the fall began when inflation figures are weaker. We had the RBA in 1 week not only cutting rates, but also lowering their forecasts. And this week we had the meeting minutes show sort of a more balanced measure, but this didn't last too long. Lots of worries also about China, about Chinese debt. Okay, not a new story in my opinion, but the fact that The Economist made an in-depth report about that, and that this is a topic running on many agencies, TV networks, Chinese credit bubble. Well, they continue to binge or not, all this weighs on the Australian dollar. We had industrial output in China miss this week. Okay, so these are the fundamental reasons for the weakness of the Aussie. In terms of lines to watch, I have here 71.40. It used to be a line in the past, not that strong. 70.90 also worth watching, but I guess 70.50 and 70 are stronger lines to the downside. Also, if I'm not mistaken, we have there a double bottom at 69.40, right? Yeah, it used to be. No, that's an older line. Oh, it's still well, I would say 69 is the next level, and then 68.30 on the downside. Clearly, we had Australian dollar falling until the mood in markets changed back there in late February. No, sorry. Till the beginning of the year, we had Aussie under pressure and then began recovering. The bigger recovery came in at the end of February, beginning of March, but then we peaked here in mid-April. And now the trend is to the downside, resistance at 73, strong resistance followed by 73.75 and 74.40. Okay, I hope this answers the question. Watch for Kiwi to catch up with the Aussie. Yeah, we did see some Kiwi follow up to the Aussie weakness. Okay, but because many thought, okay, now that the RBA slashed interest rates, who's next? The Reserve Bank of New Zealand had actually already cut rates earlier this year. Interest rate in New Zealand is 2.25 and in Australia 1.75. But in the latest RBNZ report, it was financial stability report, they had the opportunity to talk down the currency, or at least to hint about a rate cut, and they didn't do that. So I'm not sure that the Kiwi will follow up, step by step. I see your comment. Kiwi is always 3-step down, 2-step up, kind of stubborn. Yeah, the Kiwi certainly is a stubborn currency. At least at the moment, we are seeing Kiwi dollar trade in a very well-defined range of 67.20 to 68.40. But but I'm not sure it'll really crash alongside the Kiwi. Okay. Now, yesterday we tried something new here. We did sort of a separate clip, a preview for the Fed. Let's try another similar thing today. So what we'll do today is we'll try to record during the show here the levels to watch on euro dollar in the context of the lower euro dollar following the Fed. Okay. So what's next for euro dollar after the Fed decision? What did the Fed do? The Fed meeting minutes showed us that a rate hike in June is still on the cards by saying that, repeating the word June 6 times in the statement, saying that if data is okay, many in the committee are ready to hike rates. That sent euro dollar from the previous range of 112.50 to 113.35 to a lower range below 112.50, currently battling the 112.20 line. Okay. This pair, euro dollar, the world's most popular currency pair, continues to move more by the flute of the US dollar. We do have the ECB meeting minutes today, but that'll be probably less significant. We need a big event for today is Bill Dudley. Will he confirm the more hawkish tone that we've heard in the minutes, or will he repeat his previous speeches that were dovish? Now, the next levels to watch on euro dollar are as follows. Levels I'm watching. Well, currently, if we have a confirmation of this break under the 112.15, 112.20 level, the next level to watch is 111.50. 111.50 was the level that we sort of smoothed around at the end of March, right? So that's the next level to watch. Then we had 110.70, which separated ranges quite nicely beforehand at the beginning of March, working first as support, then as resistance, and then the round level of 110, of course, eyed by many. On the downside, really, really strong support, 108.20, and then 107.10. On the upside, if we do have a recovery, 113.35, 114.10, and 114.60. Historic line, that's 1,000 pips above the historic lows of 104.60 that we've seen in March last year. And then we have 115 and 116.16, which was the high for this year. Euro dollar, all in all, is already 400 pips below the highs. The movements are quite slow, but I'm optimistic that we'll see further moves to the downside on euro dollar. Okay, that's this segment of euro dollar following the Fed decision, the next moves, the next technical levels to watch. Okay. If you have questions, yeah. Okay, so Luca, as always, shares with us his great charts. Double top formation confirmed in Kiwi. Yeah, where 6840 is the level you're watching. Anyway, what's that chart? Okay. Yeah, I see the range 6720, which I see as a double bottom, and 6840 as a double top. Yeah, target around 6550. Exactly, that's a line of support. I've also seen in the past. So let's look at Kiwi. Yeah, okay, so that's a 4-hour chart, 6720 support, and yeah, 6550 used to work as support and lower ground. Right? So yeah, also here we've seen the Kiwi sort of losing momentum at the highs, failing to break 70.50, also double top. Lots of double tops and double bottoms with Kiwi dollar. And the next level, I certainly agree, 65.50, also sort of a double bottom back there in February and March before we had a surge to the upside. So I know that many traders like euro dollar or pound dollar or the dragon, pound yen, but Kiwi dollar, if you can sort of, if you're okay with lower amount of pips, I think you do have opportunities right here. Okay. Yeah, let's see if we have more comments here. Probably take some risk off to work out. You may see that soon you're stuck sitting on the edge of the cliff. Yeah, whatever today, I'm not following the stock markets, as you know, so closely, but yeah, let's look at S&P. But actually, if you trade stocks only on the basis of what stocks are doing and not on will they raise rates, will they not raise rates, QE, China rumors, just the profitability of stocks. Actually, we have 3/4 of year-over-year declines in US stocks, and it's quite likely that we'll have another such decline. So stock markets do not look so good. There's a great correlation between stocks, commodity currencies, and commodities such as oil. So yeah, there are reasons not to like US stocks. And if US stocks fall, the Kiwi also falls. Yeah, so following up on your comment there. Okay. Yeah, I'm not sure they'll fall off the cliff. They do get a lot of support. Remember that each time we have some kind of wobble in stock markets, the Fed tries to smooth things out. But at least, so maybe they will not crash, but it's hard to see more upside. It seems that momentum is gone. Okay. I guess we'll have to break under 1800 on the S&P to have a real crash, but things can also happen fast. You never know. Okay. Let's return to euro dollar. Not moving too much this morning. Wonder if we have more news about that Egypt Air flight. That could have an impact later on the day. No, only know 66 people on board and the plane disappeared. Somewhere close to Egypt. Latest update. Too early to conclude that the plane has crashed. Okay. Anyway, this could have an impact, especially if it's terror-related. If it's an accident, probably no impact. We'll get more news about this during the day. Yeah, any pullback and to $113 CAD is a buy for me too. Yeah, could certainly see that. I also look at 133.10 more or less in dollar CAD. Let's just take a look at dollar CAD and then do the wrap up for today. 130.56 is the current level, under 130.80, which I see as resistance. Looking at the daily chart, yeah, probably room to the upside. What we've seen recently with the Canadian dollar is that it did fall when oil prices fell, but didn't manage to really take advantage, didn't manage to rise about when oil prices did advance nicely, basically expressing its weakness. Okay. So this is the wrap up for the live market open for Thursday, May 19th. We have dollar domination in markets because of the Fed minutes that did go for the hawkish side. They mentioned the word June 6 times. They are data dependent as always, more data dependent than they were before the December hike, but many of them see raising rates in June as an option, given if the data is okay. And so far they're sort of pleased with inflation, employment, things like that. They might postpone it to July because of the Brexit referendum, which they did mention as a risk, actually, in the minutes. So anyway, the chances for rate hike in June have doubled from 1/6 to 1/3, and that pushes the dollar higher. Okay. Among the stronger currencies, we see the pound because we had great poll for the Remain camp showing an 18-point lead, an absolute majority for those wanting to stay in the EU. Among the weaker currencies, we see the Canadian dollar pressured also on inventories, and the Australian dollar remains under pressure because of the RBA, China, etc. Okay. Elsewhere, we had, UK jobs report was okay. Inflation in the Eurozone was as expected. And the Australian jobs report was somewhat mediocre, not really helping the Australian dollar, not good enough. Too many part-time jobs, not enough full-time jobs. On the charts, of course, the trend is dollar positive, and we can see it clearly here in euro dollar. And we have a separate segment on the levels to watch in euro dollar. Anyway, clear fall under 112.50, battling 112.15, 112.20 at the moment. Next support 111.50, resistance 113.35. Pound dollar 146.40, I would say, is the next level of resistance. Support 145.10. We have some data. We'll talk about that soon. Dollar yen made a break above 110. Let's see if it holds. Next level is 111 support at the previous resistance line of 109.40. The Canadian dollar CAD made a break above 130, reached resistance, rejected it, resistance at 130.80, next resistance 131.70, lower support at 127.50. Australian dollar dipped its feet under 72, currently bouncing a bit back up. 72.40 is resistance, followed by 73. Support, low support 71.40. And the Kiwi dollar, we talked about this more than we usually do, and I'm happy for that. 67.20 to 68.40 is the range. It is leaning lower, following the footsteps of the Aussie. Today is a busy day in markets. We have, first of all, in the morning, UK retail sales at 8:30, expected to show bounce back in sales, could have a limited impact, maybe positive, maybe negative on the pound. Remember, the pound is looking at the next Brexit poll. 11:30 ECB meeting minutes. A bit stale. A month has passed since that meeting, and that meeting didn't provide changes, but you never know if they'll hint about further rate cuts or not. I don't expect too much of that, but certainly if you're trading euro dollar, worth being aware of this release at this time. At 12:30, US jobless claims at 12:30 GMT expected to drop from the highs. Shows that the US job market is still okay and it was only a one-off or two-off. And the Philly Fed index is also expected to bounce. Canadian wholesale sales worth mentioning for if you're trading the Canadian dollar. At 1:15 GMT, number 2 at the Fed, Stanley Fisher, a known hawk, speaks. He will probably mention the option of June. We'll probably be cautious, but anyway, that's a warm-up for number 3 at the Fed, because number 3 at the Fed, Bill Dudley, is a dovish Dudley. If he repeats his previous speeches, which were cautious, not talking about rate hikes, shying away from rate hikes, this could hurt the dollar and could reverse some or all of the gains seen last night. But if he echoes what we've seen with the Fed minutes, that based on data, June is certainly an option, then we could see an extension of this move. Remember, we have a divide in the Fed. We have many hawks, but the ones that matter are a bit more dovish. We've seen how the hawks lifted the dollar, Yellen and Dudley pushed the dollar back down, and if Dudley warms up to a rate hike in June, that could give another leg up to the US dollar. Okay, so that's it for today. Let's see, we have last minute comments. No, okay. So I wish everybody a safe and successful day in markets. Thanks for coming, and see you tomorrow. So that's it. Thank you, and bye-bye.